What's going on, all you traders and investors? Thanks for joining me once again. I know it's a little late. This is Trade Docs, Thoughts on Trading. The segment's called Eye on the Market, where I go over a broad list of 32 ETFs to see where we got the opportunity, where the money's moving to, where we can make some money at it. This segment's being recorded so you can check it out on most likely YouTube. It's not going to be my channel. It'll be BMT Trading Club. And if you're watching the video, make sure you scan that QR code so you can get into the website and get any type of help you need, whether it be getting started, if you're looking for your strategy, if you're having a hard time understanding options, having a hard time understanding how the market works, if you wanted to get into investing or into trading. So we got what you need. There's a couple programs. Of course, you're not going to start in the college level courses. You're going to be starting, in kindergarten, especially if you don't know how to read a chart. Besides that, make sure you check that out. I'm going to move this quick. Today is Monday, June 28th. It's about 9 a.m. So I had a long night last night. I had a rough week towards the end of the week, so yesterday I took some time for myself the second half of the day. Went fishing with a buddy and ended up going. We didn't catch anything. We left all the fish over there for all the other fishermen. It's like we were doing our part. We weren't trying to no, honestly, we didn't catch nothing. But we went back and jammed out. I used to be into music a long time. As a trained, I went to school for sound engineering. I played clubs, so my buddy needed some help. They were just jamming. I set up the sound, hooked up the board, and then just started taking off, and then the beers started flowing. You know how that goes. But anyways, that's why I'm a little late. The market's gonna open in about a half hour. As far as I know, the futures are up a little bit. Gold is kind of stabilizing, but let's just get into this. I'd like you guys to watch this Monday during the day or Monday night, so that way you can still get the flavor of the market for the rest of the week. And myself, I do this for myself, so I don't know what to trade unless I get this done. So without further ado, let's get into it. Thoughts on trading with Trade Doc. Segment's called Eye on the Market, where I go over a list of 32 ETFs, and I'm just removing. Okay, so first up, we're going to start with USO oil. And oil looks like it made a new high on Friday. USO made a new high on Friday of 50.48. Translated into USO, that's 70. That's about almost $75, $74.90. It touched 74.60 around there, and really can't see what the percentage was on Friday because technically the markets are open in the pre-market. But yeah, this is steadily gaining. It's got the slope is pretty much the same as it was for the last month. So we'll see if there's any type of retracement in oil. As for right now, it just keeps on moving. And check out my last podcast when I was talking about the reasons why we're seeing oil prices doing what they're doing. I'm not gonna get back into that on this podcast. Next is XOP, and that's Oil Explorers. They also made a new high on Friday at the close at 100.07. Prior to that, they had touched at 100 about 2 weeks ago. Good retracement. They're coming back from they're coming back from last week. They're pretty much up 9%, close to 9% on the week. So oil explorers, I think they'll be consolidating and kind of like hitting the ceiling of 100. But if they can break through, they'll just be a continuation of a trickle up. Next, we have OIH, and that's oil services. These didn't make a new high on Friday. Their highs was at 248, and that was about 3 weeks ago. They're kind of right now consolidating in this price box between 191 and 250. So here is probably a good spot for consolidation trading, butterflies, calendars, because it's going to be in this price box. The volatility is pretty low, so I'm taking it. I'm not recommending doing iron butterfly, iron condors, just because the volatility is pretty low. The volatility was a little higher in the beginning of the week, so we might see a jump in volatility once the market opens here in the next 22 minutes. Next is UNG, and like I was expecting, UNG is on a breakout. So they hit a bottom here of $8.21. Now they're trading at $12.32. Translated to UNG futures, that's 360 for natural gas. Volatility has always been up on natural gas, but this is a clear breakout. Could have a little consolidation, but we're gonna see and retest the 1320s. They're retesting the 1320s right now. They're at 1254. Next is XLE, and that's the energy sector. Energy sector is actually hitting a support resistance level, and this was support resistance from back a couple years ago. The lines are still there from my analysis a couple years ago. One sec. So I'm gonna continue. We were talking about XLE, and that's the energy sector that covers like Halliburton, Kimber McMorran, ExxonMobil, Chevron. So they look like they've been stabilizing this ETF, and like I say, as long as oil stays up, we should see these companies continue to just remain stable, even move up a little bit. Next is XLU, and that's utility sector. They actually went up on Friday. They were down on the week, and maybe it's looking at this, maybe it's a risk on, so maybe the markets could have a nice pump. But XLU is still at the top of the range, anyways. Their highs was 68.05. They're now trading at $64. Next is XLI, the industrial sector. And actually, I just spoke with somebody. Those are late customers. So I started the project about a month and a half ago, just to let you know what's going on. I started the project about a month and a half ago, and he just calls me now saying that he's going to be ready for the third week in July. And the whole reason that he's been delayed is because there's shortages on, he's talking about like metal rods and insulation. So that steel, insulation, and plastics are kind of, there are shortages on them. So right now, this the industrial sector here, they need materials. So, and he's telling me how wood lumber is up 200%. So it's up 3 times the amount. Because I went to buy lumber and I looked at a piece of I usually don't use lumber. I use a little bit, but I went to buy some plywood, and I'm like, what the heck? It was like $100 a sheet. It was like $89 a sheet. Something I used to pay like $25 a sheet, maybe like $23 a sheet. I mean, it's pretty ridiculous. And yeah, and this is driven pretty much politically. I mean, there's still plenty of wood. Uh, you know, if the government tells you to stop your factories, there you go. Now the guys that need the products to get their jobs done and actually create, because we actually create. We don't like industrial sector produces metal, produces everything. But if you don't have the end customer, which would be us contractors, that we are actually the artisans, and we, the architects, artisans, installers that actually create and provide value for the world, then what's the point of producing all of these things? You know, so there's the whole mind state of the world is just off. It's as I was talking to other people that's in business, in the business wise, how on our end we don't get the respect, but then if we just didn't do it, like I'm pretty much retiring this year, so they're gonna be, there's gonna be a hole in the market, and I hope it gets filled. I could sell my company to somebody, but whoever wants it is gonna, they're gonna have to deliver pretty much the same thing I've been delivering for the last 14, 15 years. Right. Anyways, the industrial sector is kind of stagnant, moving sideways, probably some more consolidation trading. Now, if they can't get materials in order to make a profit, then most likely that the industrial sector will stay in this range and maybe have a drop down, which was anticipating just because of what structure it's creating. They peaked out at 106. Right now, they're trading at 102. Next is material sector. The material sector is drifting down. Like this is for like raw materials, and um, I just they just don't like the way the material sector is more geared towards like energy sector. I mean, I have some raw like cement and other companies in there, but it's almost a little bit geared towards the energy sector, which is, huge market cap, so I can understand why. But the material sector might drift down at this point. Next is XME, and that's metals and mining. Last week I had set up, looks like I said it was looking like it's going to be a retracement, and it's kind of following that. Like it was up this week, but looks like it's ready to push down and retest 35.72s. Right now they're trading at 43. Next is the MJ sector, and this is stagnant. This is probably the best sector to be in if you were in business, just because it's more of a cash business, and the taxes are outrageous, and they keep track of products. So the MJ sector is going to remain stagnant, maybe continue to drift down at this like 1% slope. Next is XBI, and this is the sector I said that had potential of going up, and I believe it's going to continue to move up. Maybe, I don't know about retesting the highs of 174.86, but it could definitely go up to 147, and right now they're trading at 138. Next is XLV, and that's healthcare sector. They had a new high at the close on Friday of 126.14, and they also looks like they'd be a little bit bullish they'd have to continue. But these other companies of Johnson & Johnson, Merck, and Pfizer are kind of not pushing the sector. So that's something to keep an eye out, because the most heavily weighted companies are not on their highs, but the sector is. So I'd have to visit to see what companies are actually moving the sector. You know, Johnson & Johnson, Merck, and Pfizer could be being probably being outperformed by a couple other companies that are pushing this sector up. But XLV on its high, trading at 125.70. Next is XRT, and this is the retail sector. And I had thought that they were gonna go down, but actually they ramped up on Friday. Actually, that was a pretty good push. They were up 6% on the week, so I was wrong about going short on them. But they're almost retesting these highs of 99.24. The structure it's making with that push, 6% of last week's push, really got to look at what companies are pushing this sector like that. It could just be they could just be pumping money into it just to take it back down. So they're trading at 97.54. Next is XLP, and that's consumer staples. They're trading at 69.73, and the market's about to open in 5 minutes. They kind of stagnant throughout the week last week. You'll see if maybe there'll be a retracement, but this double bottom looks like a temporary double bottom. Looks like it might want to push the next point of control, which is 70.68. So that's about another dollar up from where it's at. Next is XLY. XLY. It was also up last week. Let's see. XLY and the consumer staples were up. They were up 3%. So these are like companies like Amazon, Home Depot, and McDonald's. So again, probably some more consolidation, even continuation of drift up. The major support is 165. So for the beginning of the week, I'd be pretty cautious going into this week. I don't think there's going to be a pump like that. Next is SMH, that's semiconductors, and they're still drifting just above the halfway above the channel. So still consolidating up there pretty much all year between the 260s and the 227s. Right now they're trading at 253. Next is IYR. That's a real estate sector. Been consolidating for the last 2 weeks, drifting down. Maybe the heat is over, but I don't think so. Might have a little retracement, a retest of 99, but then a push above 205. Right now they're trading at 103.23. Next is XLF. That's the banks. They're doing kind of like the same thing as the real estate sector. These guys could actually retest the $34 level. Their highs at 39.70. Right now they're trading at 36.93. Next is TLT. That's the bonds. Had a little bit of a pullback. Reached the top, pulled back for the rest of the week. So if the bonds continue to move down, then it's going to be a risk-on situation where stocks and equities will be pumped. So just got to watch out for that. It could be a pump and dump in the market. Next is gold. Gold is consolidating all week. Pretty tight range as well. Really no movement. I had a lot of volume coming into this drop, but consolidating sideways. This is actually still a good level to buy at, which would be the 164s. Right now they're trading at 166.60. Next is GDX. Kind of like the same thing. If there's a pullback, I like to be a buyer, but the pullback would have to be at least, 8% pullback. So 8% pullback from where it is here would make it $31, 31.50 or 32. So it'd be nice to be a buyer at 32 for GDX. Next is UUP. It's the US dollar. Also, the US dollar looks like it's going to be consolidating here between the 25 and 24.50 range. Could even see a retest of the 24.40 range. Not a lot of movement in the US dollar, but the volatility is up. That's the bell. The market's open. Next is QQQ. And the Qs right off the bat having a little bit of a push up. They're at the top of the range. They made a high on Friday of 351.46. Could make another high today if we had a little bit of a push. So I probably expect a little bit of a push and have the Qs set up a new high. Even they could continue doing it into the Wednesday. Right now they're trading at 351 even. Next is IWM. IWM is still stuck in this price box. I always continue to move it over, still at the top of the range. If IWM is able to break out of here, then we will see bullishness in the market. So the market could get bullish into the summer, being led by oil and materials, industrials, consumer discretionary. So as everything's being inflated and everything's more expensive, these companies continue to make profit. So IWN, the small caps, trading at 232.50. At the top of the range, the bottom of the range is 210. So I don't know. If there's going to be a drop, it's going to be swift. So that goes across all the markets. The way they've been moving, they're kind of priming up for a fast drop if it was to happen. Next is the SPY. The SPY is trading at 427.10. At the top of the range, made a new all-time high on Friday at the close of 427.77. Right now trading at 427.15. Next, FXI. That's China. So they look like they're ready to pump up. Next level would be 47.22. Had a good bounce off of 45.22. Right now they're trading at 47.22. So they got about another dollar before they reach another resistance area and see what happens. Next is INDA. They're up 0.25% already. They're going to be looking like they're consolidating here, and I kind of like that. I like to be more of a buyer under 43. Right now they're trading at 44.57. Volatility is very low here, so I'm not sure how the options are going. Mostly buying, selling stocks there. Next is RSX. That's Russia. They actually had a little bit of a pullback last week, but they're moving right back up. The highs was 29.72. Right now they're trading at 29.36. So they've been supported up there. Their economy must be doing great. So maybe it will have a little bit of pullback to the 27.75s, but that's only that'd be only a 5% pullback. So, diamond hands that doesn't matter for the diamond hands. Next is EFA, and they are pulling back. This is the one I like to short. It's kind of like setting up a short setup where you can capture about 4%, which is not that enticing. But they're trading they peaked out at 82.12, right now trading at 79.69. Next is EEM, that's emerging markets. At a triple bottom, emerging markets is going to continue to go up. Right now it's kind of confirmed the structure, so we'll see a nice drift up back to retesting the 58.60s. Right now trading at 55.58. So emerging markets is probably one that I'd hold for a couple months actually. They are liquid and the options are great in there, so this is probably one that I'd like to center on, being $1 below the high, which happened in February of 58.60. I like to target like the 58s, take that as a take profit point, and I'm almost there. Next is IWW, that's Mexico. Got a little bit of bullish on Friday. So again, this is like Mexico, you got to be bullish. All South American companies, you got to be pretty bullish on them. No high risk trading, just kind of consolidation at positive delta, maybe at like a 10 delta or less if you want. But you can pull some money out of there. Their highs was 50.20. Right now they're trading at 48.45. Last but not least, hold on a second. So last but not least, sorry, I just keep getting interrupted, is EWZ. EWZ kind of hit the top here of 42. Now we should see it kind of retrace back down to the 38.46s. Volatility is pretty high. This is my go-to options trading instrument. And I like to still see the pullback of the 35s, but some consolidation on between like the 42s and the 38s would be the money maker for this week. Anyways, thanks for listening. Sorry for being late. Next week still scheduled for every Sunday. I'm a little late now. The market's open. I'm not trading until probably closer to the end of the day. I hope you guys got all this. I kind of like absorbed all this just to see how the market is going. So I'll be looking, since there was a lot of volume at the end of Friday. It looks like traders and institutions are getting a little bit cautious and not open on closing positions until like the last hour of the day. And that's kind of like, I like trading the last hour of the day because everything just happened. Now it's like, and then once everything happens during the day, the last hour is where everybody gets into the positions that they want to be, whether it be closing positions or getting into new ones. So you can kind of get the sense. I enjoy trading the last hour of the day if I have to. So because I'm not trading and haven't been trading lately, that's pretty much what I'm doing. So I'll be pretty active this week, setting things up, mostly having neutral deltas and maybe a little bit of negative delta across the markets. But don't want to get too bullish and want to have a little bit of some insurance in case things start getting bearish. But if things start getting bearish, like I said, it's going to happen all at once. There's a lot of people going to hit the exit door. Anyways, thanks for listening. Till next week, it's Trade Doc. Peace.